Good morning, everybody. Well, yesterday I thought it was possible, but kind of didn't. And point being, part of the commentary yesterday was about the potential because of the price void and the trading range. And once prices, hey, they even before they entered it, you could see here, I could break that up into like a 30-minute chart, and we could actually see right there at the open, it just popped. And it didn't look back. And even when it reached, the top there and began to, turn, which it was just an obvious place where shorts were going to give it a shot or profit taking was going to come in. It popped further. And let me see the time there. Yeah, right at 3 o'clock, it didn't go down. Right? And so one of the things we say is, well, why'd it go up? Well, it went up because it didn't go down. It was positioned to go down. It started to go down. Day traders are going to short it, and it didn't follow through when it popped back up. And what did it do overnight here? Even after the earnings of Netflix, what a clobbering! It came back. It built support overnight. You can hear. This is where Europe opens up, Germany, and I guess they follow through, and here we are up at this level. Where's it going to go? Again, look to the left. We see two moving averages converging there, the 20 and the 200, which is lined up with these overlapping bars here. It's just an obvious place that everybody sees, whether you're looking at price action, you're looking at the 200 MA, that should be a stall point. Now, we line that up and see what's over there intraday, and we see from just a overlapping opens and closes, it's a relatively broad area for intraday. Right? So, and line that up with the 200, look over there at the futures, and there really isn't much there. Meaning that there's that 200. Should have sound there in YouTube. If anybody else doesn't hear me, nothing else I can do. I see it working here in Zoom. But as we look at that moving averages, and you can see my cursor there, what does it line up with? Really nothing. So you've got kind of a wide area up there. But what's lined up with those moving averages? Nothing. Which supports it could go through it up to the top potentially. Now, 4,500 is right there. That whole number is going to be a sticking point to consider. So we've got an area that's up here that should be a turn area. And so then you just watch it on whatever time frame you're going to see, does it form a double top? Does it break trend? And so on. I mean, that's the essence of taking a position on a smaller time frame with a bias from a bigger time frame if you want to look for a short, or even call spreads up here as this reaches up here, seeing what else is at resistance, and of course SPX to line up that move, reaching that resistance area. And once it's there, you don't necessarily, for a call spread, you don't really have to wait for a double top to form. The juice will be there when it gets there. Then how far away can you get? All right. Let me read what McGraw's saying. 45 call spread. I've got 45.35 to 45.40. So I think that is a safe area. If it pushes higher, 45.45 should be easy. If the markets continue to push up into where we're talking about, there should be enough juice there. And so you have to have an opinion based on the charts. And my opinion is it ain't getting above here today. It started down here and it's been pushing up, moves up here and continues to push. So we've got this bar today, and it would have to be a monster bar to get up in here. Just think about, down here and to travel up to past the 200, looking to the left over there. Now, yeah, we see bars like that. So is it possible? Absolutely. But it would be a range that we would know that it's more likely to begin to stall. And we don't have a situation like this where there's a retest and internals were lined up and it was been going down for a while. Yesterday I did talk about, hey, you know what, here's this big bar. It's kind of like in the spot where buyers should want to step up. And I was really hopeful, complete transparency. I was hoping this thing would tank down to here. That would set up a great opportunity. But, our concepts, void, bar by bar analysis, and, all the others said, hey, that ain't happening. It ain't happening today. And it got to the top of the range. So the futures are through it. And so now we'll see what happens when it gets up here. Yeah, McGrath saying VIX is down to 20. That's been where buyers have been coming in. So, we line up these things, market internals into market analysis, support and resistance. And ultimately, all of that leads to what's the price action doing? Does it form a breakout failure? Does it form an M top? Does it form a pattern that is in alignment with our expectations that are created by price action and market internals and all of that? Okay. All right. So let's move on. Spiders, where are they at? All right. So we see the moving averages up there, 447-ish, 447, where they're gapping up. Decent gap up, not too extreme. Into this area of overlapping bars, 447 is not much significance there. So I'd call it 450. It would be the top of the move. Whole number, we got pivots up there. So here, we've got what I call a day chart versus S&Ps, which is a 24-hour chart. And so 450, as I said, the whole number, just moving my cursor up there. It's at the top of these bars that it had gapped down from. So let's just call it an area. So it doesn't have to get up there. It could get through it, but let's see. We have to look to the left and assess step by step. It's here, right, 447, just going back to where the overnight is, thereabouts, and the distance to where it could go. So I mentioned to Dan before, just, based on what I'm looking at here, how long would it take to get up there reasonably based on other information, which is reversal periods, which is at around 10 o'clock, 9:50-ish to 10:10, and then around 10:30. So somewhere around one of those two reversal periods, it would make sense for the market to, top out based on reversal periods, as well as looking to the left. And we'll see what patterns form at that point in time. All right. Qs got better potential. Now, better potential, but they're showing relative weakness. You see, they're at the top of the range. A couple of days ago, we talked about the financials, to how they were improving and how that was going to help the S&Ps. Now, you've still got FANGs that are relatively weak, semiconductors relatively weak. And so this is something that, really we pay attention to all this, but look, this is at resistance. If sellers come in here and start clobbering this, well, maybe SPX don't get up to that level. So that's a consideration, because look, Apple and Microsoft, they have an influence on the S&P as well. So if it holds up here, it enters the void. So what that means is, if everything starts to fire on all cylinders, this is where you want to be, not over in the S&Ps and things that are closer to resistance. This has a void. This is where the big move could be. And so that leads to, things that were really pounded that could, I don't want that. I don't even know what that is. Down here at support, and also have a void that could lead and start to be one of the reasons that, the Qs, NASDAQ plays some catch up. So there you have it, where you have these NASDAQ stocks and tech stocks that are at resistance. They've shown relative weakness. If they could play catch up, right, this is where the weaker start to catch up with the stronger. That could be a plus for the broader markets, of course. And this could be where obviously where the void is, that has the greater opportunity for trading opportunities, which beaten down. And that's the whole idea of, the catch-up trade. Right, Qs, right, big bar, right, where are we? Coming off of 348. Right, I got up above here and pushed back down. And I was looking at, let me just go back here. I should have written it down. I mean, you've got 350. That's going to be a big number. Just looking at open interest in calls, which are at 350. And then for later in the week, just to see what that is. Yeah. So the expiration in 2 days, 350's got a big open interest in calls. So that could be a sticking point, which is still, up above here. So if it gets there, that could be a reference point, could be a sticking point for the Qs and maybe the broader markets. So we look for references on different market indices, right? And from different ways, meaning 350, you can see this little cluster here, and it's a whole number. You got a big open interest in calls there, which should, be a sticking point initially based on this move, and then we'll see what the reaction is to it. So set an alert at 350, see if it gets above here. If that gets there, we got our 200 MA and other things that we talked about. And so we're putting together our plan for today based on, these different markets and important reference points to these markets that'll have influences, and then we'll see how it plays out. So this isn't about, the crystal ball and saying, this is what's going to happen. Like, I don't have one of those, squared some 9 and the Elliott wave counts and all that. But, this works. Now the Dow showing relative strength. But, here, this has room to move up and close that void, which is still a relatively substantial move intraday that it could make it if it keeps going. So we'll see. I mean, this high right there, which is right where it's at, that turning day, we'll see what that reaction is to that. And clearly, this head and shoulders pattern that we spoke about last week and even this week is failing. Right? So, and we did talk about the fact that this was rejected. And I've seen this happen, and it's bullish when it does, because this is a distribution pattern, and it communicates institutions are selling in anticipation of lower prices. And when it doesn't work, they have a choice. Well, if they're short, cover. And if they thought they were going to buy cheap or lower, they have to make a decision to pay up. And so that helps drive prices further up when this pattern fails. So pattern failures are a powerful concept as well. But, then we look to the left and say, well, initially, yeah, this looks pretty impressive that it was even able to do this. But what's the risk to reward here? For day trading right now, I don't like this because you need pullbacks. You need, some type of pattern here. So I'm not too anxious. And if those that are more inclined to jump on board the moving train, like this, I didn't participate in that. It's just like, it's not my, again, says my wheelhouse. I say it's just not my thing, for something like that. I like more of rounding kind of things, W's, retests where you've got a clear line in the sand. So yeah, you can drop down to little micro time frames and jump on board. That works. Anyway, let's clear this up. And so this is another situation that potentially has a better opportunity. Why? Well, yes, it's a big mess, but in reality, the only thing we're really interested in is this part of the chart. And this has a void. So let's just go here to whatever, 180-minute chart, just to compress this, to make the point that I want to. None of this matters. This is the trading playground, so to speak. Now there's a pivot up there, which it'll hit. And so where is that on the daily chart? The top of that big red bar, which is this cluster of opens and closes. And so there's a stall point. It is stalling there for the moment. But some bullish price action here, some bullish price action in the Qs. This is where the greatest opportunity is. The catch-up trades that have voids. So we'll see. Looking further, Bitcoin, right? Way back here, we talked about the correlation to Bitcoin, and this has been finding some buyers, and it's got this bottoming tail bar there a couple of days ago. And we look at, a couple of days ago, things started to reject the downside action. And yesterday was like, institutions saying, it ain't going to happen. It ain't going down there. And, things happen, right? And mid caps. And so what you can do here is, mid caps, if you use something like, TC2000 or whatever platform where you can go and look at this ETF and the stocks that are in it, you can find stocks that have voids for trading opportunities. Transports. Didn't look like I was hoping a W here. So the scenario didn't work out, the downside. And now this too has the ability to move up. SPY showing early resistance at 447 zone, Deepak. Well, we looked at SPY, right? And, that's about, what I talked about there and this area over here. And so we'll see how it plays out. We've got all our reference points. And if you set alerts based on that, where these various markets will have their turns. So on the downside, there is some premium at 44.05, which I forgot to mention. Now, maybe there won't be if the market continues to pop here in the morning, but it's something to consider. If this does get up into this area and starts a nasty move to the downside, you got, anything's possible. So why not think it? If you do the call spread up above here, as we mentioned it, as it's going up, and you do a call spread up here, and all of a sudden it, at 12 o'clock or whatever, it starts, tanking. And okay, tanking is relative to yesterday's move, and it coming down here to 44.40-ish, and you can put a put spread on down here. It should be a no-brainer. So not everything has to happen first thing in the morning. Crude oil, down a little bit, just chopping there. Silver, right, coming in, it's inverse relationships with equities, and I thought it would keep going up, but that inverse relationship turning it down. And gold, similar. So, markets are institutions are willing to turn on a dime. So you better be willing to turn also, or, you can get smashed pretty good. And last, I just mentioned that, we mentioned earlier in the week, internals are neutral, and they still are, which is kind of odd. So that's what keeps the markets interesting and keeps us interested is that, you know, I've been doing this almost 30 years and still things happen that just seem illogical, based on the things that I look at, but that doesn't last long, you know. So, we have tools, concepts that we like to call them, that force us to change our bias. Now, I'll tell you, I don't think this thing's going to get up to new all-time highs. I'm not looking at anything that suggests that. Um, it's just a moment in time where, the markets couldn't go down, so they're going up. And I think at some point, I don't know whether it'll be today, tomorrow, the end of the week, or the beginning of next week, I think they're going to hit the wall, and we're just going to see, more of a mess begin while institutions try and figure this out as to what yesterday meant and the concept of, everything else that we're looking at that doesn't look so good. So, to you, Dan.
Good morning. Yeah, well, everything Greg said, we were sure wanting that bear scenario to play out, and it didn't. And we adjusted, tightened stops on shorts, started putting on more bullish positions yesterday. There's a ton of put spread ideas. I gave you all a list of them. There's many more from yesterday still. So we should have no shortage. And I told Greg pre-market, even with the NAS was negative, I said, I'm shocked that it's not down more in light of this absolute shellacking on Netflix, and a couple of other FANGs were down. And I'm like, what was holding up the NASDAQ? And then all of a sudden I see it turning green. And I'm like, what? Is what it is. But Netflix, remember I said yesterday, I hope this thing tanks another $50 at the open. It sure looks horrible pre-market. Look, it cannot bounce despite being down 100 points. Now you get all the brokerage firms coming out and downgrading it now. But I'm looking for it as a put spread. I would love to get a climactic buy setup in the first 30, 60 minutes. So that's an idea. We stopped out of spider call spread yesterday. We did half of Q's, a 30-minute high on the back half. That one, I mean, we had a great setup. John, we were talking about the trade review. The biggest blunder we did, John, is not covering half at 50% of max gain and moving stop break even. That we're just asleep at the wheels there. So that's unfortunate. Turned a winner into a loser. Well, no, I know there's a next bus, but it's just more frustrating that we know better. It's like, come on, man, we know better. So that's the frustrating part. And I remember you saying it, but it's in the heat of the battle yesterday, and I'm so busy in the mornings, and I wish instead you asked me a direct question. Dan, we're at 50%. Should we move stop break even? And I would answer your question. Of course, of course, do it. All right, let me go through my list here. A couple earnings, couple put spread things. All right, so FedEx 30-minute high. We'll be playing some of these beat up things, as Greg said. SMHs, we did put spread into the close. I posted in the video this morning, very similar pattern. We did Google yesterday. Facebook, I didn't think got filled, but I got an email saying it did. So I went ahead and posted that as an open put spread. It's down, I guess, selling off a little bit with the Netflix, Disney getting killed. Both Netflix related, obviously, but also I read in the paper, they've been, the CEO of Disney and the governor DeSantis of Florida, they've been at each other over this woke thing. And so there was a big article in today's local paper about, DeSantis is a very powerful governor, and he, has a reputation for running over people that get on his bad side. There was an article today that DeSantis is now going after Disney to revoke their tax exempt special district status. I'm like, wow, that's like the big boys fighting. It's not fighting, with sticks and behind the bar. I'm gonna revoke your tax status. That's it is heating up there. All right, RY, Royal Bank of Canada. I just saw this going by the ticker. Look at a gap, little breakout, nice rounding bottom here. Buy setup weekly, so I gave that as a naked put. Shop relative weakness, 30-minute low. Let's keep an eye on that. McGraw for call spread. Powie, another beat up thing that made the turn. So Powie, another put spread idea. There's tons of put spread ideas. Block doesn't have options, but another bullish reversal on support. I see a little gap up here to 31. That's a 30-minute high idea. I'm going to get rid of Netflix here. I'll put block there. BKR gapping down. This is oil. Could be a call spread candidate. 30-minute low. ASML gapping. 649. Big gap, but put spread if there's any juice. OMC, can't tell where it's gapping, but the pattern suggests put spread. IBM up a lot, put spread. Climactic and made the turn. I can't see where it's gapping, but put spread. Rexer, I was hoping for a 1, 2, 3, but put spread. They're all over the place. PACW gapping down a little bit, but as long as it holds the upper third. Put spread, 30-minute high. Interactive broker gapping down. We'll come back to you. I agree with you, Joe. I totally agree. But part of it, Joe, we can talk about it later, but it was an incentive to get them to build it, 40 years ago. So I get that, but yeah, I agree. Why should it be a permanent thing? It should be an inducement, for a couple, 10, 20 years, whatever you all negotiate. HWC. V, I got, wow, the tick 1400. Fault put spread. VFC, we entered into the close yesterday. My up alarm went off. That's a beautiful pattern. That was, remember yesterday we were talking about, hey, I wasn't going to trade the 4 horsemen because they weren't compelling patterns. But we still gave compelling patterns like this. That was a beauty for a new trade. Yeah, Lulu's up. Had some news of they want to double their profits, whatever. All right, this little guy, Newer was in the weekend letter. So 5-minute high is good to go. Stop 69.60. Post this. Yeah. I mean, I'm not quite sure what the target is with all this stuff, Thomas, to the left. but 30-minute high.